Hi, Richard here, and it's the last day of the week, Friday 28th of January, getting close to the end of the first month. The US dollar index continues to push down, and we've got 3 weeks on our market force signal. What looks to be the case is that we're going to get support very shortly and then continue up. Now, what's this based on is a retracement of around 61% here. The nature of this looks corrective, particularly on the daily chart, and also the euro, in contrast to this, looks extremely toppy. So expecting some support any moment now for a push to the upside. Also, it's worth noting that gold has really pushed down along with silver, meaning that it's really been let go in advance of what's happened with the US dollar, which is a very bearish signal. Here we have 5 waves counted. We went through this last video of 1 to 2 to 3 to 4 to 5, and of waves of a lesser degree, 1, 2, 3, 4, 5, and this wave here, wave 5, is equal to wave 1 exactly in length. So we've also got some little reversal signals happening here, although clearly they have also been happening on the way up. This has been a grinding trend. It's broken through a target of 11,854, broke through convincingly, so goodness knows, maybe there is further upside, but certainly from an Elliott wave perspective, the wave count would suggest that we're going to see a correction at least. And where would that correction go? Well, we can put on a Fibonacci retracement, and on the long-term support line we're looking at 11,578, which is exactly the 38.2% retracement. If it goes any further, then that will also give us a good indication about future direction. If support's found at this level, then we'd expect some further upside, pushing up to sort of, well, I don't know what the next Fibonacci is, but it's probably around the sort of 12,200 mark, certainly above that high at 12,000. So that's a good Fibonacci round number as well, and the S&P 500 is doing the same at 1,300. So retracement wise, we'd be looking for support about that 11,578. The Australian dollar is head and shoulder, is only further developing, and in the case it lets go, the target for that would be to measure to the neckline, and if I can let that still, I'd copy that over, and the target could be as low as the sort of 94 area down around here. But that's certainly developing. They don't always pay out. This one certainly went down to the support line, long-term rising trend line, as opposed to actually hit its target, but there's no doubt when the neckline broke, it certainly traded down heavily. Here we'd expect some of the same actions. So from a Fibonacci perspective, we could measure the 2 highs, and 96 would be the 1-for-1 extension. That is the same measure of this leg if it is indeed a correction. So that's A, B, down to C, 96. Or indeed, if this is impulsive and the jury is out, then we'd be looking at 91 or 92 cents down here, which is a fair way to the downside. But certainly in the short term, we can see it's pushing down as we speak on this live chart. 96 would be our first target. Moving on to the euro, this is the daily. This has been a very powerful trend. Nice trading since before Christmas, straight up through Christmas, and then traded off heavily, and then this has been a real ABC up. So it looks like a wave 2. If we count that as 5 down there, we come down to 3 there, and a complex 4 to 5, and then A, B, C to here. You know, wouldn't really be surprised at all to see the euro come off very significantly in the event that whatever the trigger is, fundamental economic trigger, that we see strength in the US dollar, which of course would mean this is going to come off. And oil, you know, really progressively downside. I think last time we talked, I actually put in the potential for this head and shoulders pattern to, inverse pattern to reverse and go to the upside. Well, that clearly didn't happen. Broke down, and when they break down, they usually do it hard, as this has now, and there's a bit of a gap happening down at the 86 level, and indeed would expect to see that come back to support, as we would for the Dow. So this is really divergence going on between, well, we'll come to gold in a second, but the Dow certainly is, oil is certainly pushed down, diverging from the US 30 as well as the S&P 500. The triple top in gold on the daily is playing out. We had a nice breakthrough. It's pushed down heavily yesterday. The next target is 1262 at that long-term support line. So we may see a bit of a bounce, but this is an impulsive movement to the downside. Last night was very pronounced. So that target at around 12, let's call it 1260 to 1300, is certainly on the cards, and I'd say very much down at the trend line. Here's the Aussie market, the ASX 200, as depicted by the SPY. It is certainly working its way down to support. We've got a doji star in there. This sideways grinding movement has gone nowhere. The April high from last year, if I bring that over to the left here, you can see that's the April high. Well, on the Dow and the S&P 500, clearly this was taken out up to that 12,000 mark, but on the Australian market, pretty significant divergence, and our economy is supposed to be the golden global economy. Well, at the moment, there's not a lot of true believers. This is the VIX. The VIX continues to go to the downside, so there is unquestionably complacency out here. The way the VIX works, we could probably lift that trend line up a bit. The way the VIX works is that as it falls, that means the markets are generally going up. As it increases, that means we'll see the markets fall. And of course here is the last bit of volatility we had, which was in May last year, and that was from the April high. So April down here, VIX increased, stock market came down, VIX spiked up, very extreme. These are not record, because the GFC set the records, but these are extremely high. Big bearish engulfing pattern there, which then saw it come down effectively in a number of waves, possibly that looks correctional, but 5 waves to here anyway. But since then we've been grinding down, and it continues to do so. So there's no indication that we're going to see a move up at this point, but in the event that we did get a sharp up day, that would certainly validate the markets going down. And interesting to look, this is Amazon, which is a good bellwether. Since the middle of last year, very strong move to the upside, $110 upwards to 190, and very clear 5 waves there. So I thought I'd put that up just so you could see. There's a good overlapping wave 2, ABC, ABC, and 5 waves down, complete final C leg before we did these 5 waves back up. So bearish day the day before, and then yesterday showed a bit of strength. Certainly Amazon will be a good indication as to what's going to happen next, but you can see the sorts of money that could be or has been made on this. Bottom of the GFC in November 2008, from $40 way up to $190. That's a pretty significant gain if you're carrying 10 or 20 or something thousand of those. Here's Troy Resources. This is gold. Big spike high and then heavily traded off. So it's coming down very quickly towards that $3 mark, and that's the UK sterling. We'll move on from there. Let's see, gold is what I was looking for, and sorry, we've done gold, and the last one was in fact light crude, which we also talked about. Anyway, so that's it from the Market Forecaster for today. I'll talk to you soon. Cheers.